Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is May 18th, Thursday, last stock pick of the day series for the week. We are going to take a look at a retailer here, Target. Let's jump right into the video. So you're all probably aware of who they are, but let's do a little bit of a look at them here. www.target.com, that is their homepage where I pulled this information from. As the Dayton company looked for new ways to strengthen relationships with guests, company's leadership saw an opportunity to develop and introduce a new kind of mass market discount store that catered to value-oriented shoppers seeking a higher quality experience. Through visionary leadership, the company took the first step toward transforming its family-run department store chain into one of the nation's largest discount store chains. On May 9, 1961, the Minneapolis Tribune reported that the Dayton company planned to form a new discount store chain. The store's new president, Douglas J. Dayton, drew upon the company's vast wealth of department store experience and stated that the new store would combine the best of the fashion world with the best of the discount world and quality store with quality merchandise at discount prices. In a discount supermarket, 75 departments in all. Shopping at the new unnamed store was envisioned to be fun, delightful, and welcoming to the entire family, featuring wide aisles, easy-to-shop displays, fast food checkout, loads of well-lighted parking for 1,200 cars. That's a pretty big parking store, right? So fun facts where they're at now. So back in the 60s, they were created, right? Obviously, they weren't named Target right in the beginning, but that's where they ended up. But currently, 1,954 stores in the U.S., 56 supply chain facilities in the U.S. They also have supplies, right? Global sourcing. They also do global sourcing. You can check it out over here on the right. Quite a few different countries they're pulling items from. 2 corporate campuses in Minneapolis and Brooklyn Park, Minnesota. 6 additional offices across the country. 1 global capability center in Bangalore, India. Nearly 20 sourcing offices globally. That's these over here. 0 stores in Australia. Yep, we get lots of questions about Target Australia, but it's a totally separate, unrelated company. That's pretty funny, actually, right there. So apparently there is another store in Australia that's named Target, but not affiliated. So a lot of stores all over the world for where they're pulling merchandise from, right? So probably one you're familiar with. I'm sure you may have shopped there. Again, www.target.com is their homepage. Now let's get into the fun stuff. The reason we're looking at them, down 4.22% on the day. We are talking about Target Corporation, ticker TGT, out of the consumer discretionary sector. Closed the day out at $154.17. 52-week range as low as $137.16, as high as $183.89. So they are heading back towards their low, but not quite there yet. Still kind of mid-range between their high and their low, I would say. Average volume 3.2 million. Today was 7. You can clearly see that sell-off throughout the day, right? Just pretty much a straight down from start to finish. Market cap of $71.158 billion, a beta of 1.02, so they are more volatile than the overall market. Price to earnings PE ratio is 26.40. I feel that's a little elevated. I would like them back in the teens personally. Earnings per share EPS is $5.84. That's actually a very nice EPS. Earnings date, the next one is coming up August 15th through the 21st. For dividend is $4.32 paid out on the year. Divide by 4 because they are a quarterly payer. We'll see that here in a minute. Decent dividend yield at 2.69%. Actually, that's a good dividend yield, 2.69%. Ex-dividend date was May 16th, so you just missed that one. If you do buy them now, you would not be in line for their next dividend payout. And their one-year target estimate, at least according to Yahoo Finance, $179.45. So they see it creeping back up towards that 52-week high here. And again, not affiliated with Yahoo Finance, just one of the sources I like to go to. Now, I always recommend going in and looking more deeply into the company. So you want to get into the statistics, get into the financials. One of the things I like to look at under statistics. Dividend yield theory, comparing their 5-year average, 2.25, to their current 2.69, or forward over here, 2.69. They are the same. And if this is high, higher than their 5-year average, which it is, that speaks to some potential undervaluation, according to dividend yield theory. And if this was lower than their 5-year average, it would speak to some potential overvaluation. So according to dividend yield theory, anyway, this is potentially undervalued currently. Payout ratio, 66.22%. This is not matching what I'm seeing in the other slide, but we'll see that here in a minute. So I would do maybe one more source just to back check which one of these is accurate, right? But 66.22% is under the 75% that I look for. Now, free cash flow, that's what they pay the dividends under. If you go into financials, you'll find income statement, their balance sheet. Look at all that. You want to make sure you're growing revenue. You want to make sure they're paying down debt, their assets over liabilities, all that information. If you checked out the video yesterday, we kind of went a deeper dive into that because we didn't have another source to look at, or it didn't go to another source to look at. So I went a little deeper and showed you the other stuff from the financial statement and the balance sheet. But for this purposes today, free cash flow, that's what they pay the dividends out of. That's what you want to make sure that is growing over time. 2020, 4.04 billion. We'll just use the front number, 7 billion in 2021. 2022, big drop down from 2021 to 2022. And here is what is concerning to me, because it looks like we've got a trend here. 2021 it dropped. 2022 currently it is in the negative. Free cash flow in the negative, you never want to see that. That tells me that we have something going on here. And is it concerning enough that the dividend could potentially be cut? That's what you want to watch. So not looking good on the free cash flow front. Another one, repurchase capital stock. They are repurchasing their own stock, so that is good. You don't want a company that's diluting you as a shareholder, which means they're issuing more stocks out there. You want them to be buying back or staying the same. Another source that I like to go to, stockanalysis.com. I recommend at least 2 sources to make sure you can back check information, preferably 3, so you can make sure that the first 2 are correct as well. Just make sure the information you are getting is accurate. So stockanalysis.com is another source I like. They give you a lot of the same information, financial statistics. You can go into the forecast. That's what we're looking at here. They have 33 stock analysts that have taken a look at this. They call a consensus buy right now. They have a low estimate of $142, which would be a 7.87% decline from where it currently sits. So they see it coming down even more. Might be one if you're interested to watch and see if it is on a downtrend currently, and maybe you can get it cheaper, closer to that 52-week low. That's where I like to pick them up. Average estimate of $179.55. That would be a 16.49% increase in the stock price. This is pretty in line with what we saw at Yahoo Finance. And if it happened to hit their high, $220, that would be a 42.74% increase in the stock price. All the while, you could collect that 2.6 or around their dividend yield. Now, another one I like to go into in statistics here, look at financial efficiency of the company. We're looking at return on equity, that's ROE, and return on invested capital. I like them both above 10%. Return on equity, very nice, 25.50%. Return on invested capital, just under the 10% threshold I like at 8.10%, but that is not concerning. That's close enough where I'd be fine with it. And again, you'd want to compare this to their companies in their same industry and see what they are doing. But this is very, very nice numbers overall here. The only thing that's a little concerning that I'm seeing is the free cash flow. Now we always want to look at the dividends, right? See, this is what I was saying earlier. The payout ratio here, I'm seeing 72%. The other slide I saw in like 66%. So not sure exactly which one is correct. Maybe it has something to do with that negative free cash flow showing up. Does show that it has nice dividend growth, 20%. Now, the last time they raised it, right, May 17th of 2022, they paid out 90 cents. Then they rose it up. They raised it up to, in August 16th, to $1.08, and they've been riding that ever since. So I would expect, if they are going to continue their trend of increasing their dividend, their next dividend, not the one that's going to pay out in May, right? They're going to pay out on June 10th. So not this one here, but the one in August of 2023 is where they would raise it. That's just my opinion. But this one does look good. Quarterly payout ratio under what we want. Free cash flow is a little wonky. That might be one to watch. And the decline from 2022 to 21 might be something to watch. But overall, not bad metrics on this one. I do like the company. My wife does shop here. We get some of our groceries and some stuff for the kids from there from time to time. So I am interested with their products. And again, we use it. I know a lot of people shop there. You may shop there. Let me know down in the comments down below. Do you shop at Target? Well, that is it for this one. This is my investment criteria. If you want to check that out, go ahead and pause this. You can read through what I look at for adding a stock, or to check if the stocks in my portfolio are still meeting the metrics that I want them to meet. This is it. Well, these are supposed to be quick hitters, trying to find value in the market. A lot of green the last couple days. It looks like they might be getting handles around this debt ceiling that the government's involved in right now. Personally, I don't like to get into politics on this channel, but they raise the debt ceiling every other year. I don't understand why they make it a big deal every time it comes to that point, other than it's political in nature. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. Hopefully, you're on your own journey as well. Join the vested interest community, trying to build a like-minded community of dividend growth investors. So that we can share our experiences, share stocks that we're watching, share stocks in our portfolio, how they're doing, where we think we might be running into trouble, if there is trouble, just sharing all of our experiences and information overall. There's probably a lot of smart people out there that we can help each other out along the way. Obviously, you're not going to benefit from my investing, and I'm not going to benefit from your investing, but we could at least benefit from each other's knowledge, right? Sharing information is always a good thing, in my opinion. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. Hey, don't forget to stop back by on Sunday. I'll have my portfolio update so you can see all the activities in my portfolio this week, and we'll see you in that one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk, can lose money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.